how to invest in private equity as an individual. So think private equity is just for billionaires or big institutions? Well, not anymore. Let me show you how you can invest in private equity as an individual. So what is private equity investments? Well, private equity means investing in private companies or real estate deals that aren't traded on public markets. It includes things like real estate funds, business buyouts, venture capital, and private credit. You're investing in the engine room of the economy before it hits Wall Street. This is where businesses get funding or they attract capital in their pursuit of scaling before they go public and get a large exit. So what's changed? Well, years ago, only the ultra wealthy or institutions could access these types of deals. But now, platforms and new regulations have opened the door to individuals like you to be able to invest in private equity deals. The minimums have come down and access has gone up. So let's start with your status. Are you accredited or not? First, figure out if you're an accredited investor. This means you earn over $200,000 a year or you have $1 million in net worth, and this doesn't count with your home equity, primary residence. And if you are accredited, you now have access to a wider range of private equity funds, syndications, and direct deals with business partners. If not, don't worry. There are still options. So what are the ways to invest as an individual? Well, option one is you can invest in real estate syndications, also known as partnerships. You would invest as a limited partner in their private deals. Option two, crowdfunding platforms like Fundrise or Start Engine. Minimum start around $500. Option three, private equity funds. These pool investors' money into larger deals, often with professional managers. Option four, direct deals with operators or sponsors you know and trust. So use tax-advantaged accounts. So you can invest through a self-directed IRA or solo 401k to defer or eliminate taxes on your gains. This is powerful for the long-term compounding effect of that vehicle. So what do you look out for? Well, private equity comes with risk and complexity. So make sure first to vet the sponsor, then understand their fees, and know the exit timeline. So ask them, how does the deal make money? What is the downside? And how do I get paid? I did a video called the 6-point Jockey test. I want to be sure, one, that they have invested their own capital. Two, that they're not doing a bunch of different investments. They're just focused on this deal or this strategy. Three, I want to make sure they have a great team. Four, I want to make sure that they have a track record, that they've done it before. Five, I want to make sure it's a simple business. And six, I want to be sure that they tell me about their failures. If they haven't failed, they haven't been battle tested. If they have failed and they tell me how they solved the problem, that's great. That's the type of person I want to invest in. The point is that the jockey or the sponsor is committed. That's the first step to evaluate if you want to invest with someone else. And next, ask the sponsor or the manager of the investment, how does the deal make money? And again, ask them, what is the downside? You want to know the risks up front. And then, how do I get paid? What is the structure of the partnership or the waterfall payments to me as the investor? These tough conversations and then highlighting them in the operating agreement or the private placement memorandum is critical to get the terms outlined up front in writing and through the verbal conversation so there's clarity in the investment. So final thought is private equity is no longer out of reach. It's an exciting high upside space that is more accessible than ever. So start small, do your homework, and build as you grow with your trusted partners. So you want a roadmap to get started? Download my free guide, The Individual Investor's Guide to Private Equity. It covers deal types, platforms, tax tips, and how to get your first deal done. Also, check out my next video on how to vet private equity sponsors and avoid costly mistakes before investing. Remember the 6-point Jockey test. I'll see you there.